Good evening, all. Ira Epstein of Linn and Associates with your metal market wrap-up for this Thursday evening, and this is March 18, 2021, about 6:40 p.m. Central Time. I'm late. We've been working here on a lot of new software. Two things. Charting software, there'll be a new version of this coming out behind me, and one of the features I'm putting in it, so you'll know, will be settlement time. Now, you may not think that's a big thing. Take a look at your charting software. You know there's an example in the metals. Let's stay there. The settlement time is at 12:30 p.m., but the trade time is 4. Now tell me what it is in the dollar index. Do you know? Do you know what it is in the other markets? We'll be telling you those times. So I think that's an important feature because I look at those because I realize the market slip-slide around that time going in, and the pros use that to their advantage because they know where the settlement's going to be, and it tells them maybe how some of their indicators are going to look. Okay? Just because it's trading, by the way, let's assume the market was at 1650 in the gold, and it had been at 1700 at 12:30, and you buy the market at 1650. On your statement, it's going to show a settlement of 1700. Your brokerage firm isn't going to send you that $50 profit. You're not out of your contract, so don't get carried away with that. The second important thing in metals, and it's going to be in financials and others, I warned you about the yin-yang impact yesterday. And when you get a major Fed statement, big announcement, and I think yesterday was a big announcement, how we react, which was up in all the stocks, as you know, and how first Asia and Europe will react can be very different worlds, the yin, the yang. And that's exactly what happened in the market. Suddenly we're worried, well, gee, what do these higher interest rates really mean? You know, once the market saw a 176 print in the 10-year note, the world changed on everything and everybody got scared. As it turns out, the metal markets, okay, they're giving up a little bit tonight. Dollar was stronger, and you certainly broke back a number of the currencies as the dollar lifted itself. In the energies, you gave up about 8% today. That's a huge drop in the energy prices, a mixture of COVID, inflation worries. They're all coming to roost. When I look at the weekly area chart of closes in gold, it keeps me honest. For the week, the market is up $11, which is great. However, the bias would be down because you're under that number. I define bias as the relation of current price to where that 18-week is. I do it on a daily chart with the 18-day average of closes. Now, when we look at this chart today, we can see the markets come up, just as we've been talking, climbing that wall here. The pattern is bullish. You have a pattern of higher lows and certainly higher highs. Now today's action, and I'm talking now Thursday, because remember Friday's action's already been trading now. If you take out the low of today at 1660, that could create what I call a bull trap. I'll show you that with moving averages now. The market is fighting at that 18-day average of closes. I call it the line in the sand. You will hear me say it repeatedly. It's when a market gets up after a break or comes down for something like this and then goes back, and will fight a battle against that number eventually. It's always an important number to pay attention to. If I come back here, you had the big rally. You came back and notice where the battle started shaping up and the market told you what the trend is. If you take that out, you got a problem because you will break this pattern. Let's assume it's not taken out. Well, until it's taken out, I think the pros are going to nibble into the gold. I think that they're going to be buying it in the 1726.90 level. If you take that number out, I think they walk away from the trade. If they can scrape one out where the market can hold, where just might this market go? Well, one of the numbers would be wherever the Bollinger Band is. So one of the numbers might be this 18-day average of, the upper Bollinger Band at 1778. So I think traders will be looking at that, and they'll be looking at momentum pointing up. Now, admittedly, it's not the strongest of the bull markets. It's run up to where it can fail. But if it can grab its footing and start clearing these highs of 1751, 52, I start getting much more excited for wherever that Bollinger Band is. In the gold-silver ratio, you can continue to see that silver is not gaining on gold. As long as these numbers go higher, you need over that average especially, but as they go higher, what happens is you need more ounces of silver to get an ounce of gold, and you see in the silver market a similar pattern to gold with this one exception. Prices are unable so far to stay over the 18-day average, whereas in the gold market, they have stayed over that number. The trend is up. The momentum has been coming up, but the bias is staying down. You really need to close over that number to prove that you can do something on the positive side. In the copper market, I told you that I thought that the market, when it got up here and pulled back to these averages, was just going to gravitate against that, and the market would see the Bollinger Bands wrap their arms around the market. Well, they're probably done wrapping their arms around it. You can see they're not trying to narrow in too much on it anymore. It could happen over time, but right now this market's content to just chop around and make traders crazy. If you're looking for a trend out of that, bye-bye. You're probably going a little nuts. In the platinum market, we now have a pattern of lower highs and higher lows. Overbought condition, bias up, trend up. Battleground's going to be the 1194.80 if the market wants to challenge that. Should this market take out 1188.60, what was bullish will instantly turn bearish. And I think the bears would sell there with stops over the recent highs. If momentum were turning down at that time, you'd even get the pros involved. Watch out, then you could go for the washout. In the face of all that, the palladium market's at a new contract life high. This is the highest this market has been. 26.73. So out of nowhere, this market is going, and I have to use out of nowhere, from 22.63 to 27.49 and just kept going. Now, most traders cannot afford to trade this. The margins are beyond high. Exceptionally high, let me put it that way. But you call your broker, you will see what I'm getting at. But it's always something fun to watch, and it's classic what I teach. Notice this long sideways action. That turns out to be either a top or a base. I don't know which until it breaks out. And this was a classic breakout. Both numbers in the top quadrant. You'd have to get back under this low to prove that it's not one of those. Doesn't mean it has to keep running straight up. That's unusual, but it's exactly what it did, as you can see. And pretty strong move. Now we get to the last part of the puzzle, and it's an interesting one. The dollar index has the swing line down. You can't get away from lower highs, lower lows. What number did the market stop at? Remember what I tell you about this 18-day average of closes. It's the line in the sand. If the market wants to break further, it's got support between here and the 91.12 area. What would turn the trend up? Nothing. You can negate this move down by taking out 92.04.5. You can add to the bearishness of an existing swing line down if you close under 91.32, but I expect you're going to have a pretty strong support layer under you between that number and 91.12. So this uptrend surge we had came to an end, and again, the market looked at yesterday's action. I'm laughing because of these yin-yang impacts, and away you go. I teach it. The market did what I teach. So I'm not upset with anything that went on today. Momentum-wise, the market is no longer overbought. Now let me show you. If we come back here, I consider any reading over 70 overbought. And as I tell you, when the market gets overbought and not embedded, I don't think the pros are adding to positions. I think that they build into their algorithms or whatever their guidelines are. All an algorithm is all the thought you have about trading, putting weights to them so that the algorithm knows, am I buying, selling, when it's comparing them, it's scoring it all in some manner. That's basically what it is. You can tell me anything you want, at the end of the day it's going to do that. And I think that that scoring would have fallen back because of that overbought condition. Overbought conditions do not say, come buy me. They tell you, I think as a pro, it would say, maybe you got to consider taking some money off the table. Momentum it's gotten to a point where it's not good. You look to see these moves, these vertical moves, and where they start slipping back. I talk about this and a lot more in my nightly and morning writings. Yes, I write 2 newsletters a day, but they're sort of like the Reader's Digest. I give you the headlines of what I think are important of news, my own analysis of it, bullet points as to how it works. I'm not interested in writing books every night. I've written a book called The Psychology of Smart Trading. You might want to look it up. You can get it on Amazon and others. But I wrote a book. It's too much work every night to do that. Why do it? The videos I do in the morning, that's where the meat is, because I'm able to sit there as long as I want. They can be 20 minutes, they can be 25 minutes long, each one. And in them, I'm able to work with that and show you, I want you to buy here, sell there. A lot of people think here, I'm giving you a summary. To a degree I am, but I'm also telling you what I think the pros are doing. As a pro, I'm telling you what to do in the morning subscriber videos, and you could decide, does that fit in with your thought process or not. I'm certainly not out to manage your money. I manage no one's money. So if you're interested in all this, all you need to do is give my staff a call. They'll give you a free 2-week research to it, including our charting software, our futures trading package, everything we have. You judge if it makes sense to you. You can go to iraepstein.com under free offers, it's there, and you can read about my research if you go to the top of it at that point. I'm Ira Epstein. You have a great day. Look forward to seeing you tomorrow. If you don't see a morning video, it's only because I'm so hard at work on this software to make the morning subscriber videos from the time I record them now, including rendering, to be posted in minutes instead of sometimes an hour, 40 minutes. Big difference. We're hitting the home runs with it. You got to get through a few little things, but we're just about there. You have a great day.